The UAE currently is in 3 wars, not one. The first is Iran. That war is not my concern, really. There's the second war, which is the information war. The third eye is ignorance. The knee-jerk reactions, the emotional reactions, the social media-based analysis that people are doing is what is making them lose out. And they're the ones who will lose out, not Dubai.
We know that smart investors, they are not thinking in weeks or months, they are thinking long-term. If you were in the shoes of an experienced investor, how would you be looking at this entire situation, but more importantly, how would you be reacting to this?
Go and check out the CDS scores, what we talked about, the credit default swap. They need to be looking at the force majeure declaration of the president. They have to be looking at the support package which has been put in place. They should also be looking at what is the current ecosystem for business. They should be looking at the S&P Global report, which has given us the highest ratings.
I have clients that are calling me saying, Paula, I want to double down now because I know that now is a time where maybe I can negotiate a little bit more. Maybe I can see better payment plans now if I'm buying off-plan real estate in the UAE.
If you look at the institutional investors, the large funds, the family funds, if you look at the seasoned investors, the long-term investors, we've seen no change in pattern. Because like you said, they're thinking long term.
That is what separates an amateur investor with an experienced investor. UAE doesn't build for today. The UAE builds for whatever type of scenario that people may not even think about. If you think about it from an infrastructure perspective, the energy independence, the supply chain, everything. And so when people ask me, how is the UAE dealing with all of this? The answer is very simple. The UAE was built for situations like these,
Absolutely.
for crisis. Not for this particular situation, but for any crisis. Dr. Anand, welcome.
Thank you for having me.
The reason as to why I wanted to have you on the show is because you have this way of seeing things very clearly, and especially now with so much noise and people overreacting and people being so dramatic and panicking. I wanted to have a conversation with you because I wanted to get your point of view, your perspective on this. And I don't want to be overly positive. I don't want this conversation to be overly positive. I want this conversation to be very grounded, down to earth, realistic. And I don't want to feed into fear either because it's not needed. So how do you see all of this?
Well, I agree with you firstly that we don't want it overly positive or fear-mongering as well. Let's keep it real. Okay, we are not shying away from the fact that there is a challenge in Dubai right now, but we need to read the challenge in the light of everything else around us. So if you ask me how do I see the situation right now, it's something I've been telling a lot of people and putting a lot of podcasts. The UAE currently is in 3 wars, not one, 3 wars. I call it the 3 eyes. The first is Iran. Now that's a war. We were not asking for it. We didn't initiate it. We got dragged into it. But we're handling that extremely well because the government with the TAD system knows how to deal with it. I'll probably share a number with you on that one. Mm-hmm. That war is not my concern really. There's the second war, which is the information war, the second eye. Suddenly, everybody has become experts and authorities on Dubai and the future of Dubai and the history of Dubai, and everyone's giving expert analysis out there. So information or misinformation, this is happening. But because it's on social media, it's global. So this war is the real global one that we are in. Perceptions of people being presented as facts, AI-generated videos, historical situations being presented
Yeah, talk to
as
me
if it
about
happened
those
now.
AI-generated videos.
Okay.
I've seen quite a few of those.
AI will do what you want it to do. So if your intent is to put something out there to dramatize the whole thing, you can do that. You could have used the same AI to produce factual videos to explain to people reality on the ground. So I guess it's really the intent of the person who creates these videos.
Agree.
So that's the second eye. The third eye is ignorance. People without really understanding what is happening on the ground, the ability and the tenacity of UAE to overcome these things actually very quickly, they don't understand. So with ignorance comes fear. With fear, the anxiety, and then people make wrong decisions as a result of that. Now, of these 3 wars, the 2 that's really a challenge for us today is the second and the third, not the first. The first one is being handled by the government extremely well. Let's take an example. The TAD system is the best air defense system in the world. The United States themselves uses THAAD. You can't find a system better than this even for the money that you have. So we are basically working with the best air defense system on the planet right now. That shows you that a small country like the UAE is putting that kind of money into a system like that. The confidence that we have in our system, our rulers are walking around. They're in malls. They're having a meal there. And this is not a PR stunt. There's 100 ways you could do that. This is not a leader sitting behind a desk in a bunker that's been designed to look like he's in his office and he's talking. These are people on the roads. Why? Their confidence is in what is above them. The TAD system. And they understand that that system protects me as much as you. That's why I'm walking with you. I'm next to you in the mall. Our ruler in Dubai was at a horse race 3 weeks ago.
I did see that.
So these people are telling you it's business as usual with an unusual predicament that's happening at this moment. So when you look at that, I can see that I don't have to worry about the THAAD system or about the missiles being. Frankly, I couldn't stop a missile if it came anyway. But I have confidence in our leaders. If you look at yesterday's numbers in total, since we're doing this podcast, I'm just putting dates. If you look till 22nd, last night, we had a total of 2,133 projectiles coming towards us. Cruise missiles, ballistics, and the drones, the UAVs. From that 2,133, only 100 fell as debris. They were intercepted, but they fell within our territories as debris, and it did cause some damage. So that is a 4% of the total number of missiles that were thrown at us. If you look at missiles that actually came through, 4 came through. That's a 0.2% of everything that was thrown at us. By any war standards or metrics, that is a sheer failure when you throw 2,133 missiles or drones at your neighbor and 0.2% is your strike rate.
They panic so quickly. I feel like because everyone is always in fight or flight, so a minor thing happens and they immediately think worst case scenario. It's interesting because I have been here, I haven't left Dubai since all of that started happening, and I feel so safe. Like honestly, I feel safer here with all of that going on compared to as if I was in London, for example, or in the US. Like the possibility of you're way more likely to be thrown acid on your face or be stabbed in the UK than being hit by a missile in Dubai.
Yeah, you see, when death comes, it doesn't differentiate. Whatever be the medium through which it comes, it's death. And you are safer here than you are in most other cities on the planet. So that's a fact. But again, when you come to the putting this situation in perspective, I believe a long-term perspective and a smart, seasoned investor perspective is what we should be using. The knee-jerk reactions, the emotional reactions, the social media-based analysis that people are doing is what is making them lose out. And they're the ones who will lose out, not Dubai. We have history that shows us that Dubai will bounce back and go beyond what we were before any such event happened. That has been proven several times before.
If you look back at the data and all of the different crises that we've experienced, whether that was COVID or the dot-com crash, we know the UAE recovered faster than pretty much any other country in the planet. So I have a lot of faith in that as well. But if I put myself, for example, in the shoes of an investor, it's very easy to get confused with all of this noise and all of this nonsense happening, especially in the media. And so we know that smart investors, they are not thinking in weeks or months, they are thinking long term, right? And so if you were in the shoes of an experienced investor, how would you be looking at this entire situation? But more importantly, how would you be reacting to this? Or would you be reacting? Or would you just stay back and just wait?
We have to firstly categorize the types of investors in terms of their mindset, especially in situations like this. If you look at the institutional investors, the large funds, the family funds, if you look at the seasoned investors, the long-term investors, we've seen no change in pattern in any of them. Because like you said, they're thinking long term.
Yes.
So even if they were doing an off plan, you're looking at minimum 3 to 4 years in terms of your investment strategy.
Agreed.
So whether something happens for 4 weeks, 2 months, a quarter, the market will bounce back. History has proven that. So I will not judge on the basis of a week to week basis. I would rather go more long term. That is the reason why the institutional funds, the seasonal investors haven't disappeared. Why? They don't react based on market sentiment or mood or what is on social media. They look at the data and market fundamentals, demand versus supply, yields. They look at the strong government policies, the financial reserves of the government to be able to keep credit facilities open, to stick with their agendas. They look at these and beyond. They look at the population growth that is still projected to come. Nothing has changed. They look at the projected GDP. They look at global reports that are currently evaluating Dubai and giving it one of the, not just Dubai, UAE, one of the highest ratings in terms of safety as well as investment havens. So they look at that kind of data because these are smart investors. They go by the data and not by the mood or the reaction of people.
And that is what separates an amateur investor with an experienced investor, because I have seen that as well. When I look into my own clientele, I see two different types of behaviors. I have those investors that are emotional investors. They base their decisions based on the media, based on fear, based on greed. And we know that emotional investors, they carry a higher risk because they are not basing their decisions based on long-term thinking, based on strategy, right? And then you have the other behavior, which is I have clients that are calling me saying, Paula, I want to double down now because I know that now is a time where maybe I can negotiate a little bit more. Maybe I can see better payment plans now if I'm buying off-plan real estate in the UAE. Maybe I get a really good deal. And so I think it's very important to be able to help a lot of these emotional investors kind of like shift their mindset a little bit. And that reminds me a lot of that famous statement by Warren Buffett, which he talks about be fearful when everyone is greedy and be greedy when everyone is fearful. And there's a reason as to why he's one of the most respected investors of all times, because he does the opposite of people in these situations.
Yeah, but then you see, you're right. He is definitely one of the best role models for investments. But unfortunately, people don't put money based on that. Those are the minority. Those are just a few who do this because you have got these exclusive evaluative investors who have clarity with what they're doing. And then you have the mass investors. Monkey see, monkey do. Everybody's buying, market is good, so I buy. I don't even have clarity on my own data. I'm doing it because market is good, the volume of transactions is there. Similarly, there's mass exit from these kind of people or mass panic because they never really understood what they were really investing. They just saw the opportunity,
Agreed.
but they didn't understand what the opportunity was built on. That is the reason why for emotional investors now, when we speak with them, we need to be able to redirect them to understanding the fundamentals and the market numbers or performance on the ground. Not just in terms of transactions which are being registered, they must understand how is the market respond, how is the government handling this, how are international financial models looking at the Dubai model now and giving it the green light. Why are they even doing that? This is important. This is what I think the market really needs. This is what takes care of the two wars that I was talking about, the information war and the ignorance war. Because every one of us now becomes an ambassador for the UAE. The government is taking care of the missiles, but we need to take care. We have to be part of the right information and the right education out there. That's why we have to be the ambassadors. So my view, it's probably going to come up in some of your questions. I think we need to focus on some of this data, which is verifiable by anybody sitting anywhere on the planet. So it's not speculation-based investing. It is a clear, specific, strategic way of doing things. So I think some of this data is what we should be looking at really today.
Yeah, I agree. And I think there is a lot of work that can be done when it comes to educating a lot of these investors, because as you rightly said, a lot of people just came in without even knowing what they were doing, and they were just buying anything and everything for the sake of just taking advantage of the opportunities that were there, but they didn't really understand the mechanics behind it. And I think it's really important for you to educate yourself before you put your money at risk.
Yeah, definitely. So maybe I think we should look at some of these things. What are the market fundamentals now that is keeping the government positive and firm on their agendas, because they're not changing anything. So what's the reason this is happening? This is very important. Now, speculations, I'm seeing it all around us. I never like to speculate. Why? When you're speculating, your client is also speculating.
Yes.
An emotional charge comes into the conversation and we get nowhere with that. So we need to actually deflect away from the speculation and redirect to some of the fundamentals. In a time like this, you have to firstly look beyond real estate. You have to look at the economy and the government model. Can it sustain? Because the missiles are not attacking real estate. They're going to attack infrastructure. They're going to attack global confidence. They're going to attack way of life and the entire economic framework that we have. They won't attack just real estate or retail or hospitality. So to have confidence in our industry here, we first need to have confidence in the government and how the global outlook positions Dubai. Now, on the 6th and 7th of March, which was just like 2 weeks ago, the S&P Global rating was reviewed for the UAE. Now, S&P Global is a financial advisory firm. They evaluate the strength of economies and governments. They do it for large multinational banks and the multinational corporations. Now, in the first week of this month, when the attacks started, S&P Global reviewed the rating of the countries in this region in the light of what is happening right now. And they gave the UAE one of the highest ratings that you can get on the planet, an AA/A1 plus rating. Now, people need to understand this because it is critical. Today, large-scale investors, institutional funds check these kind of ratings before they put all their billions into the infrastructure there. To get an AA rating means you have zero risk or extremely low risk of defaulting on payments. You have strong credit facilities available. Fiscal spending, which is how government spends money, has not changed. Your long-term vision and agendas is still holding solid. Mega developments and infrastructure is continuing the same way. Economies are open. The financial systems are open. Your trade and logistics are open. So they look at all of this. Two countries that sit in the AA category for long-term stability, Singapore and Germany. Not small countries by any yardstick. And the serious investors understand this. And Singapore and Germany are not having missiles thrown at them right now. Having the missiles thrown at us right now, the UAE has got the AA, which is long-term financial credibility and stability. The second thing, because sometimes an investor will say, oh yes, that is long-term. In long-term, markets do rebound eventually. And Dubai has got a good history. But what about short-term? What's going to happen now?
Yeah, a lot of people are asking me that question.
Exactly. So we have the AA/A1 plus rating. The A1 plus is the highest rating in the world on short-term stability. So we have the highest. In fact, if you look at Ras Al Khaimah, our neighbors, they got A, we got AA. They got A-1, we got A1 plus. So we have a much stronger rating here. But again, this means short-term, everything that we need for honoring payments, honoring the payouts and commitments to cash, debt ratio to cash, all of these things is very, very strong. So in the short term, that is why mega projects are continuing. Nothing is going to stop. So with these two ratings, the S&P Global that rates all governments in the world, the multinational companies and the global banks is giving us in the current situation, the strongest short-term and long-term ratings. Now, that is what the institutional funds and that's what the long-term investors are looking at. In addition to that, there are 2-3 very important
smart
things.
Investors are looking at.
Yes. I think there are 3-4 very important things people need to look at. There's something called a CDS, which is your credit default swap. Now, this is where you measure the strength of a country's financial reserves because you insure this through third parties like Lloyd's Register from London. You've got the Morgan Stanleys, you've got the JP Morgans. These are the kind of global bank groups, Citicorp groups, you've got the Stanchart, Barclays. They become third-party insurers to your financial systems. Now, there is a number, a score that is given to each country or city as well. Now, that score has to be below 100 for you to be considered two things. Safe haven for wealth preservation. 2, investment-ready territory. So, new money coming in as investment and also a safe haven to park wealth. To get these two, your score must be below 100. If you go back to 2008, specifically talking about Dubai, our score was 900. Which was a very, very bad position to be in because we're extremely high risk. Why? The Dubai of today is not the Dubai of 2008.
I'm so glad that you bring that up because I was going to ask you a question about this. Now, if we remember 2008, when that financial crisis happened, we know that there were a lot of issues that happened. There were liquidity issues, there were developers disappearing, there were default rates were so high. How has that changed? Like now, as an investor, how do I know my money is safe? From a developer's perspective, has DLD, Dubai Land Department, done anything about that? Like, how do I know that my money is safe despite everything that's happening right now?
Right. I'll answer that, but let me just finish the earlier one because I think it's important for global investors to understand. When we were at 900 as a score, we were a tiny little Dubai. We did not have solid infrastructures. We didn't have large financial reserves. Oil does not exist in Dubai, though Abu Dhabi has a lot of it. So we were depending a lot on foreign investments coming in. That's the reason why Dubai was sitting in a slightly shaky position because when the 2008 crisis happened, it was global, so the money dried up. And that was the reason why we had such a high risk rating at 900 points because it meant the score was 900. It meant that we were at risk if markets were at risk. So that was not a safe, good place to be. But we started to rectify that because we changed our structures. We reviewed policies. The escrows came into place. We did have payment plans starting to get linked to construction. Financial reserves were being created by the government. Long-term vision and strategy got put into place. All of these were giving the confidence. So foreign direct investment was coming in, not just on an impulse, but more on strategy. So by the time we reached COVID, our numbers had dropped from 900 to 300. That was a 200% decrease in the risk factor, which was again putting us in a very, very strong space. Now, when we look at our current ratings, and anybody can verify this by going online and checking what I'm saying, we know that 100 and below 100 means you're in a very, very safe space. Abu Dhabi is at 35. Dubai is at 65. And what's the reason for this? You see, Dubai has been the one that has been working with global markets all these years. Abu Dhabi, Ras Al Khaimas have been coming recently in the last 4 to 5 years. So we have been working heavily with international investments. Therefore, it is at 65, our score. But anything below 100 is excellent. Abu Dhabi also has got oil reserves, they've got sovereign wealth, and they have the strongest balance sheet in the entire region. We are built on market dynamics because we are more linked to global markets. So we are at 65, but we're still way below the threshold for us to become a risk factor. We are still rated as very, very safe. This is from S&P Global, Bloomberg Terminal, C Bonds, Central Bank UAE. All of these are the sources for this kind of information.
And how is that relevant to
investors?
For investors, international investors?
For the first thing is, when you're investing, the attractiveness of the city is directly connected to the attractiveness of the opportunity. So for me, the safety of my investment is directly connected to the safety of the economy and the policies that we have in place. So we need to have the economy open, fiscal and financial systems open. Look, for example, our banks are all open. You can withdraw as much cash as you want. You can transfer cash as you want. There is no restriction. Lending is still going on. Mortgages are still happening. Last week, the government announced a 1 trillion support reserve to be there to help all the small industries and the banks. We had announced 256 billion, a similar reserve during COVID. And in 2008, the government put 50 billion into the banks to keep them afloat. Many global banks collapsed. Not a single local bank collapsed. And then Dubai, because it was at the forefront of the global development or advancement of the UAE, Abu Dhabi funded in 2009 another 37 billion to keep our infrastructure, like the metros, etc. In 2010, another 35 billion was put in by Central Bank and the Federal Reserve to Dubai. So Dubai got an additional 72 billion because Dubai in the year 2008 was leading the charge. So, but you see the government stepping up and putting their own money into the game and at the same time strengthening to have the escrows, the property law in place, putting legal systems, judiciary systems in place to protect the money for the investors. In addition to that, if you look right now, and this was actually out just 3 days ago, once again, anyone can verify this. Currently, we are sitting on banking assets, UAE banks I'm talking, banking assets of 5.4 trillion, not billion, 5.4 trillion. That is available at our disposal to liquidate if we require. The government has put now a 1 trillion reserve in place. Our banks are holding reserves of 400 billion. We're talking dirhams. The currencies in circulation in our banks right now is 920 billion. Foreign exchange reserves is over 1 trillion. We are sitting in a very strong position, which is why the ruler, the president, said no force majeure in the UAE. Force majeure is declared when you have a situation that's beyond your control. Just to go back to 2020, which is recent, people will remember it, all the airlines declared force majeure. The reason they declared force majeure is because the airlines earn money by putting passengers on their planes. Mobility was restricted, lockdowns in place, people couldn't travel. So when no passengers are traveling, there's no earnings. But my planes are parked. We have to pay the parking fees in airports. We got suppliers to pay, but we cannot earn revenue. So airlines went into force majeure because the situation was bigger than what they could control, COVID. The hotels, the tourism companies all declared a force majeure. Now, what does force majeure do? It allows you to put all contracts on hold. It allows you to stop any work that involves further investment from your side. It also allows you to stop making any payments because it's a situation beyond your control. Worse still, it allows you to renegotiate terms of your contracts. So it's not healthy for an economy because people start leveraging and getting softer rates, cheaper prices, extended plans, etc. Now, the government here has clearly said no force majeure in the UAE, which means what? This is not bigger than our control. One, force majeure means a superior force. Secondly, no contract is on hold. No one can put a contract on hold. No operational development to stop. All mega projects continuing. All payments have to be honored. No renegotiation of contracts in any shape or form because we are financially strong, sitting on very strong reserves. No force majeure. These are the reasons why investors need to have confidence. You cannot just rely on an escrow account.
We need to start really getting our facts together.
Absolutely.
Because people
Absolutely.
really are not aware of this. And going back to my original question, so I truly believe that we are in a much better position now. We are ready for
100%.
crisis. We're not. It's not how it was in 2008.
We have a crisis playbook in Dubai. You will see the same model being repeated every time. For example, the first thing is you have immediate liquidity being pumped into markets. We saw 50 billion coming in after 2008, and we saw Dubai getting 72 billion again after that. When COVID hit, 256 billion was put in tests. Targeted economic support scheme was put in. When we had the floods, 30 billion was announced in 3 days' time as a support system into infrastructure, the Tashrif system for the super drainage systems that we will have, which will increase our drainage capacities by 700%. We saw that happen. Now again, when you see there is a potential crisis, a 1 trillion reserve. So one of the first rules of the playbook is to secure the financial stability. The second is control the global narrative. That is why, if you notice our government here, every 1 or 2 hours updates, information, day to day, exactly how many missiles are coming in. All the information is being shared because we know there is an information war as well. So we don't want our people to speculate. We have confidence and numbers are telling us a very strong story. 0.2% success rate. That's a failure by any military operation from any aggressor nation. So when we see all of this in place, we can see the government strategy working very, very clearly.
Yeah, one thing that I've realized living here, but also reading a lot, is that the UAE doesn't build for today. The UAE builds for whatever type of scenario that people may not even think about. If you think about it from an infrastructure perspective, the energy independence, the supply chain, everything. And so when people ask me, how is the UAE dealing with all of this? The answer is very simple. The UAE was built for situations like these,
Absolutely.
for crisis, not for this particular situation, but for any crisis that may happen. So I think the question really was never whether the storm would happen. The question was always, is the UAE ready for these kinds of storms? And I think it's very evident that it is.
You see, one of the reasons Dubai and the UAE stood out was we did long-term planning. I don't see any other country or city putting out 10-year strategies, 14-year strategies, 31-year strategies in the future. Now, I don't believe the government in UAE has got their heads in the clouds and they're making these beautiful, rosy pictures, the economic agendas, the urban master plans, without taking into account that during this 10 years, 14 years, 31 years, pandemics can happen again. You can have financial crises again. You can have global wars happening. So you build your strategy, but you build into it, what do we do in case some of this? We cannot predict when these happen, but when they happen, what do we do? So our response models are in place and the confidence is there in them, which is the reason why the government is continuing with everything. There's no knee-jerk reaction and stopping everything because most cities or countries don't have these plans. So when something happens, it's a freeze on everything. Here it's not a freeze, it's just a go ahead with things. So we evolve through each situation, learn for the future, and we have our bounce back strategies in place.
Agree. And I want to zoom in a little bit in real estate. So we know that off-plan, if you look at the structure of the market, off-plan is a big portion of that, right?
Correct.
So a lot of people are thinking, oh, the developers are going to lower their prices. But I believe that big developers, they can't really lower the prices because that would be putting all the properties that they sold, they would be putting the value down of those properties, including the land itself. What I think we might be seeing, which to be honest, I have seen a little bit of that already, is better payment plans. So maybe instead of an 80-20, we might see 60-40 or 50-50. Maybe post handover payment plans. Do you think I'm right thinking, or do you believe that developers will start lowering the prices?
No, you're on track. We have seen both. Like you said at the beginning, we just don't want to be overly optimistic. In situations like this, caution enters the market. Caution enters the market not from the market side, but from the investor side who's sitting remote, listening to all the noise, not having access to the right kind of information. But when you look on the ground here, the big developers who are going with the mega communities, etc., are in line with the government, are in line with the strategies. That is why right in the middle of all of this, EMAR goes and has another launch and they're oversubscribed 110% on day one. Nakheel goes and announces an expansion of the D3 design district area. That is sold out. Ohana last week had 6 billion worth of property that came out in 2 days. It was gone. So these big players understand the business model differently. One thing. Now, again, the big players will never drop their price. The reason is, one, if I drop my price, then I have not protected all my investors who
other
have come
buyers.
before me. So like you said, yes, there could be a softer payment plan. There could be maybe some sort of a candy would be given. However, it will not be on price. Who drops the price then? That's the question, because you will see some of this happening in the market. These are the developers who are not able to stand their ground on their real quality, brand positioning, location, and the performance of the brand. So they don't have the confidence that people will still continue to come to them, and therefore they are going to start to give discounts. The second reason many of these developers would do it is they don't have strong financial reserves. And when you don't have that, you're literally riding the wave in a market where everything is good. And so your cash is rolling in and out, in as investments into your company, out as payments that you make as you go through your process. So this has to happen constantly. In a situation like this, where people are going a bit wait and watch, they're not coming to you as much as they were coming before. So that puts you in a situation where you don't have solid reserves. And many of these developers, I'm sorry to say this, operate without escrow accounts for months and months. So they're taking all that money into themselves. So just because they start offering you a discount now, to go to them doesn't mean the best strategy. Because you need to be careful. Why would you be giving a discount when the
Agree.
premium developers are not giving the discount and they are in demand-driven locations? You're giving it because as you are right now with your product, with your location, with your current payment plans, you're not able to sell. But you need to create the cash. And that's the reason why you try to give these discounts, etc., to try and get people to come in. But my advice to any buyer, especially off plan, if they think I should go in now because there's a discount, watch it. Be very, very careful. Look at the legacy of the developer offering it to you. Look at their track record. Look at the type of product on which they are offering it. Where is the location of those products? Because you don't want to be getting into something where discounts have to continue because the escrow strength or the liquidity of the developers is questionable.
But frankly, that advice applies in any circumstance, not just during crisis. I've always told my clients this, but sometimes I get people coming to me and they're like, no, I think I'm going to go for this project because they're giving me discounts. And I always encourage them to ask themselves, why do you think they're giving you a discount? And all of my episodes, all of my podcast episodes, I always repeated the notion of developer, because the developer that you choose will protect you in a time like this, in crisis.
Yeah. You see, a discount model is never good. But at least in a time that is good, there is a little bit more confidence that money is constantly flowing in. Therefore, I can still get away with a little extra risk. When the timings like this become more cautious, the demand is not slowing down. People are just taking a little longer to decide. They're more evaluative. They're negotiating harder, so the sales cycles are longer. So when people are taking time, it doesn't mean they're exiting the market. They're in the market, but they're in a wait and watch. Now is the time when you will separate the men from the boys in the market. They're not necessarily big. Even tier 2 private developers, there are some very good developers. But now is the time when the smart investors understand these are the people I can bank on, because apart from the economy and the government policies being solid, these developers have a strong case for their own economic model, which will actually help me as an investor. So now is when they should be careful about these.
I agree. Yeah. And when you look at the buyer behavior, what have you seen in terms of the split between international investors versus people that live here and are becoming more active in investing?
Okay, I think international buyers are slowing down a bit right now. But if you talk to the international buyer, he's not slowing down on fear. He's saying, I'm going to wait and watch. He's not saying, I won't be buying. He says, yes, this market makes sense. But in the light of what is happening, let me just have more clarity on it. So I don't mind waiting, but I do plan to continue. Now, this is where you and I or the broker comes in, because we can help them with the clarity. When everyone is speculating but not working with fact, the buyer is not saying I won't buy. He's saying I will wait for clarity, then I'll buy. So demand is delayed, demand is not dropping. That's what people need to understand, which is the reason why the premium developers understand that some transactions will take a little bit more time, but we will hold our prices. You will not see changes in the listings that are happening. The distressed deals in the market are distressed deals that were there in Feb. They were there in Jan already. Those were not because of what happened with Iran. Those were there because people had over-leveraged themselves in off-plan markets, or they had some other genuine distress, and that's why they put... Those units are still available. A few may enter at this point, but they will never define the market. Which is the reason why, if you look at investors who are coming in now, yes, many investors, their mood now is, I could get a good deal right now. And there's no harm in looking for that. I mean, Warren Buffett himself was a perfect example of that. But he's looking on a good deal, not on a risky investment. We need to understand that part of the story. No one talks about. People talk about he would take the risk when the prices were low and he would buy. Yes, but he would buy what was secure and solid. Not just because people were just dropping prices, I'll pick up anything and everything. So I want to take the advantage of the good offer, this opportunity window. I want it, but I want it with credible investment
and
opportunity.
This is where a good broker comes into play.
Absolutely. And this is where the strong developers will suddenly start to show up, and the market itself will filter them out.
So let's talk a little bit about, because just before we went live, we were talking a little bit about the benefits of all of this happening, that some developers will have no choice but to have to leave the market. How is that beneficial to the economy?
Well, firstly, beneficial to the economy because many of these players are not very large contributors. One. Secondly, many of them, when they come in, they're not here to be part of the landscape as contributors to the economy. They're here because there's an opportunity. Honey attracts flies. So you will get a lot of people here who are opportunistic and who have grabbed the moment. But these people, even when they're opportunistic, they never looked to build a solid financial base for them. So in the event of some event like this which would happen, they are not able to stand. Because they came in with opportunity. They play, invest or gamble more with the investor money rather than their own reserves. So many of these people, actually it's good long term for brand Dubai to have lesser of these players in the market. We want affordable category. We want boutique developers, but we want developers who can stand on their own reserves. What if a situation happens, another pandemic happens? We want people who can hold their ground. We don't want people who will collapse because of that. That is bad for the economy.
How can investors do their due diligence on this? How can they identify and get the data for those reserves?
Well, I think they should be asking the hard questions. They should be telling the developer, you need to demonstrate to us your legacy with some credible records that we could look at. Today, access to information is available to everybody out there. So they need to access this information, talk to financial advisors who are able to actually give you the right advice into these kind of companies. All these companies have to publish their results out there. Look at the legacy. Firstly, look at their tenures in the market. Have they been long-term players? They have the chance of surviving more because they've gone past previous such situations. That's proof. Second thing is, even if they're new developers in the market today, they'll have legacy elsewhere. If they have legacy elsewhere, you know they've gone through similar situations in the past. Someone who's brand new could be an opportunist coming in now because the market is great, or maybe a genuine player long term. But let's look and see how they're operating. What is their business model? Are they taking cash into their accounts, which is always a risky thing? Are they putting it into escrow accounts to protect you? So if they're taking it into their accounts, that's fishy business.
Agree.
Okay. Then look at where are the locations they have their product. Is it demand-driven locations or just some location in Dubai? Because some people want it cheap, they're going to ride the wave. Because what happens is when the locations are not that great and a situation like this happens, those locations come under pressure again. So a demand-driven location which has got long-term contribution fact, whether it is from touristic purposes, commercial, financial, residential, will always have a demand in those areas. So in times like this, the investor recognizes I'm much safer in that place.
Now, changing gears a little bit, I would love to hear your perspective on, let's say we have someone that, those people coming from UK or US or any other country really, they have great potential. They are very hungry, very ambitious. They want to build a career in real estate, and they've been hearing about the real estate market in the UAE, and they want to really build a career, right, in real estate here in the UAE. And then this happened. What would you say to those individuals? Should they come regardless, and should they start, or should they wait?
No, I think they should come, because my question to the counter question to them would be, were you planning to come to Dubai for short term or long term? So if you are planning to come for 2-3 months, then yes, don't come now. Because the market, while there's a wait and watch and cautious approach, there are strong developers who are still doing well. There are strong investors still in the market. But if you have a short-term focus, this is not the place for you. One. Secondly, your investors are anyway coming in for long-term, not short-term. Therefore, you need to read and understand long-term history as well as long-term future. So do your proper research, talk to credible people, reputed sources in the market, people who have been in the industry for a long period of time, who have gone through all of these, have seen the business models, have seen how developers have responded, communities have responded, how the government has. Talk to these people. They will, and even challenge them. Tell them, where did you get that information from? Can you forward that to me? This is very important. So don't stop because the market may be at this moment in a slight situation. Now is the time you come in, because who's exiting the market are people who don't have real clarity. So opportunity is still there in the market. In any case, as a new broker, if you're planning to come now, it's going to take you a good 2 to 3 months to even get your feet into the game. So if you are coming in now, take these 3 months as solid research, study, investment, activity, go around. Developers are welcoming you with open. Everyone has more time for you. So come in and get ready, because this is going to go beyond the current situation. We have seen it multiple times before. But what we have also seen is the slowdown that happens is temporary, and then there's a flood that comes after that. Everybody who was holding starts coming in again. Now, so if you want to get the advantage of that, come in now. Start doing your activities. Talk to people.
Start
make the phone
building your
calls.
foundation.
Absolutely. Give them updates. Stay visible with these people and you'll get it. Because you see what's going to happen when you react to fear now, and the floods will start. When I say flood, I mean the flood of investors coming in. That time you're not going to sit and complain, why are so many people buying? It's too much, they should slow down. So you need to be ready. In economics, there's a term, actually I use the term, you won't find it in economics. I call it freeze flood. Freeze is the typical first mentality of people when something happens. Pandemic, war, any such situation, they hold. But then gradually it moves past that stage, and then everybody comes back. So it becomes like the floodgates have opened. So a freeze will always lead to the flood. It's going to happen. So, but if you want to be optimizing on the flood, build it now. Get onto a plane and come.
And for someone that has no real estate experience, would you recommend for them to start specializing in an area, for example, off-plan versus secondary, or perhaps working instead of for an agency, working for a developer? Or what would you say to that person? Is it better for them to start specializing themselves and finding their niche, or should they start just learning everything about the market?
No, I think learning everything is never good. Because when you're working in one of the biggest markets in the world, there's no way you can have all of that in your head. So again, specializing or focusing on one thing is better. Maybe for now, not so much specializing on a specific community or a developer. You could choose off-plan, for example, or you could choose secondary. What's important is you're not going to come in and work by yourself. Select a company that has built a name for itself in that specialization. There's no point in you choosing a company that is strong on secondary, has a somewhat kind of off-plan team, and you want to become off-plan. I don't think you'll get the attention, the investment, and the bandwidth from such a company there. Go into secondary with them. And there's nothing wrong in doing that. But if you want to do off-plan and you're going into a company that's been largely focusing on secondary, why don't you choose a company that's built its history on off-plan? Because they understand the personality of the off-plan market, the type of buyers, They have the relationship with the developers. They have access to the inventory. Their trainings, their lead generations are all built to help you. Choose based on what you want to come in. But I would definitely recommend come into something and focus on that for now. You could expand later. You try and come in with everything right now, it just does not make sense to me. It never made sense to me, frankly, even in a market when it was in a good time. Because you're just all over the place. People will very quickly see you're not actually a specialist in what you do. And in this kind of a situation for me, even now, I would say off plan.
Really?
Absolutely. People who think that they are minimizing the risk because they're going into the secondary are not actually minimizing the risk. These were the kind of buyers who are anyway low risk. Let me pay full. At least I can touch and feel my asset. Assets will remain in real estate, whether it is plot, whether it is opportunity, whether it's growth model for the economy, because infrastructure includes real estate, or whether it's a ready home. It will always be there. But you need to understand. Let's take two scenarios. We have something playing out now. We are hopeful it will finish very, very quickly. Worst case, it continues for some time. Worst case, what happens to you as an investor? If I'm getting into off plan, I choose a strong developer, so I'm confident. I ensure it's a escrow secured payment, so my money is parked at least with the government. I'm safe, but I'm coming in on a marginal amount. And I'm spreading my risk over 3 to 4 years, in some case 5 years. So I'm not paying that much money, but my money is also protected. Now, if I had to go into the secondary right now, I'm paying 100% upfront. I'm at more risk because I'm putting a much larger amount of money right now. And if this situation had to continue, I might have lesser yields. People might want to leave and I'm stuck and I cannot resell. So I'm taking
From a liquidity perspective, it makes way more sense.
Absolutely. And because in the off plan, I have got it for 3 years, 4 years, etc. Plus, I've got developers coming up with creative schemes, doing things to push their inventory, holding events, and doing things to help my project sell. That's not happening in the secondary for me. It's just me and what I can do within my market and my network. So if people think that their risk is minimized just because now I buy a property that's ready, you're putting 100% of your investment into it. And that property which you bought might be 4 million today. The person who bought it at 1.8 or 2 million a few years ago. So you're actually putting 2 million as paying him back for his own returns. The risk is all yours. So I would seriously question whether you are making a better choice at this point in time just because the home is ready. Okay, you'll hold the home for 2 years, 3 years, etc., hoping the market will bounce back. You can do the same in the off plan with a lesser amount of money.
Dr. Anand, this has been phenomenal. I mean, honestly, this is information that will help a lot of people across the board, brokers, investors, just people that are just trying to make sense of a situation. Is there anything else that you would like to add?
No, I think we've covered a lot here. There's only one more thing which I would like to probably put in here, which will make sense. I would suggest that the brokers and the investors go and check out the CDS scores, what we talked about, the credit default swap. They need to be looking at the force majeure declaration of the president. They have to be looking at the support package which has been put in place. They should also be looking at what is the current ecosystem for business. They should be looking at the S&P Global report, which has given us the highest ratings. So build your confidence in numbers. And there's one more number they can look at. It's called a monetary support system that is there in place. Monetary base coverage. That's the technical term. A monetary base coverage is your cash which is in operation. Do you have enough liquid reserves to support that cash in case there's a shortage? And again, it's a global rating system. You can get it on Bloomberg Terminal, C-Bonds, Central Bank UAE, S&P Global. They all talk about this. Any country which has got a below 50% monetary base coverage means it's in a risky position. For every $2 or every 1 dirham that's in the business, I have only a 50% cover against it. The UAE is sitting at 119%. We are matching the current liquidity with a reserve liquidity and going above that by nearly 20%.
Brilliant. There is plenty of reading materials then for everyone. There you go. For all of you listening, plenty of homework for you to do. Where can everyone find you?
I'm on Instagram. My Instagram handle is anand.means.business. Anand is ANAND means.business. So anything that you want, I've put several podcasts on this. the previous videos. There's a lot of information. The economic agendas of Dubai, the vision of the government, the biggest ever budget that Sheikh Mohammed has approved for the next 3 years for Dubai, how we have handled the previous crisis. All of this they can see there. I'm reachable there. Email IDs are there. Numbers are there. They can reach me on LinkedIn. But I would suggest if they get onto my Instagram, you're going to see a lot. There's over 800 plus videos and market data points that you will see
There you go.
in
There
there.
we have the no speculation, just pure facts.
Absolutely.
Love it.
Thank
Well,
you.
thank you so much, Dr. Anand.
Well, thank you for having me, Paula.